Good day, all. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, May 29th, 2026. Ron Quaranta here with my amazing friends and hosts, David Brill and Joshua Ashley Clayman. David, Josh, it's good to see you both. For everyone in the audience on LinkedIn Live and YouTube and X, thank you so much for tuning in. Our usual disclaimers, obviously nothing we're discussing is any sort of investment or legal advice. And really what we're talking about are our own personal opinions, not necessarily the opinions of our respective firms. David, Josh, I'm still sort of recovering from conferences and stuff, and there's a lot going on. David, let's dive right into it. There's been some news, interestingly. Let's talk about the jobs data first. You okay with that?
I am. Although I think that the inflation rate and is more interesting, I think, for our audience. But what did you think of that? I'm gonna flip the script on you, Ron. And what did you think of the jobs data and the inflation data?
I meant to say inflation data, so this is what I get for not looking at the script, because the jobs data comes out next week. For May, that will substantiate some of what we've been talking about. Look, there's this constant conversation about inflation, and David, you and I have talked about it, how energy prices and oil prices and food and fuel really making it harder for big segments of the economy. And core PCE, which is the Fed's preferred measure, was up less than anticipated. So I come back to two things always, which is it's not the data, it's the revisions, but truthfully, how accurate is that particular data? It's a weird economy, David. We're seeing prices that are impacting people. And look, we see it. Food's more expensive. The Bugatti costs you a lot of money, David, to fuel up. We get it. But on the other side, corporate earnings are up. Market continually hits day-to-day all-time highs. I feel like just hunkering it down and waiting for more certainty.
Yeah, I think businesses are not hunkering down and waiting for more certainty and are just full speed ahead. We even saw like an old school company, Dell, have terrific earnings and forecasts and go up 30%. But tying it to crypto, I really been thinking about it. And, when you have a 30-year yield at 5.2%, which you can have with the highest since 2007, and you can earn that with no volatility, it really makes it hard for risk assets to compete. And I want to tie that into the IBIT outflow, where we saw almost 1.3 billion in IBIT be sold and outflow, and you can see where people would rather be going for a no risk return rather than risk assets.
David, and to that point, you and I chatted about the IBIT. We've seen Bitcoin ETF outflows a good chunk of the week at this point. I'm relatively pleased with Bitcoin's price performance, all things considered. I mean, it's down to 73 and change, 74. The bottom didn't drop out when a couple of $1 billion in IBIT outflowed. I guess I'm trying to figure out, is this simply a repositioning to different risk assets? You can go out and buy an AI stock, get a pretty damn good quick return.
Mm-hmm. I think I'm most bullish that somebody swallowed up the majority of that in a dark pool and it didn't affect prices like you said.
David, for the audience, tell them what a dark pool is who may not know, because I think that's a really important point.
I mean, a dark pool is really transactions they're sort of like block trades in a way. They're sort of, although they're not reported on the tickers, so to speak, you may still see it on the blockchain, but it's really big trades that are done off market between two large participants. And so in this case, what I thought was most bullish was that, you saw somebody take 1.2 billion in the dark pool, or 1.1 billion, absorbed by a larger player on the other side of the trade, and only an outflow of maybe, 129 million or less than 200 million. So I thought that was really positive. So building on your point, I know Josh was in there bidding for that dark pool, taking a position in the dark pool.
I don't know if you can't talk about that, but we know.
Yes, alas, David, I can neither confirm nor deny whether it was me.
She has separation between herself and the Clayman family office, David. So she doesn't bother with petty day-to-day billion-dollar trades. David, I want to talk about that a little bit as well, because when we talk about dark pools, to me, I feel my sense is that there's a lot of institutional positioning. And hear out my logic. I'd love you to tell me if you agree or disagree. Rumi, thanks for joining. Hello, it's good to see you. I feel like this is institutional repositioning, and let me explain that dynamic. Crypto's sort of been in a channel. Gold and silver are no longer the big plays. Gold and silver are in a channel. They're not even particularly good inflation hedges. You're seeing a lot of capital, CapEx being thrown at AI. And you're seeing, you mentioned Dell this morning, 30% up in the morning session. Like, I'm not talking about 30% year to date. It's like 30% today. So institutions are able to position themselves for quick alpha. And I sort of get the sense that that's some of that of what we're seeing with the institutions in the dark pools, and some of the money flows not coming into crypto. Is that a reasonable assessment?
I think it's very reasonable. I also wonder how, Bitcoin is being marketed by wealth managers and others. And, the decentralized nature of crypto and Bitcoin makes it a different kind of asset class to be marketed versus traditional securities where you have management and you have, other parties involved. So, I heard somebody talking about that this morning, and I thought it was a really interesting point. So, maybe the marketing has something to do with it, but also look, there's a new ETF that came out called DRAM. It was the fastest, I believe, till $10 billion. It has memory chips in it, and it's up over 50% in I think 6 weeks. So there's really the chips and AI stocks really have captured the imagination along with prediction markets and taking a lot of liquidity out of crypto.
Yeah, and I have a perspective on some of the money that's allocating to AI and prediction markets, David. But I know Josh wants to weigh in here as well from the Starlinked Maybach, correct, Josh? I hope you can. Josh, can you hear us?
Can you hear me? I can hear you.
We can. Go for it.
You can't hear me? Okay, so a few things that kind of track what you're saying, but are a little bit different. One is I saw that I believe that strategy, I can't think of what the 4 letters are, ST something, that it's at 99, down from the price target of 100. I'm wondering how that ties in with some of what you're talking about and some of your hypotheses. I also just wanted to flag 2 other quick things. Well, one other quick thing. I can hold the other until we get into a discussion of maybe AI and stuff. But another thing is Paul Vigna, who used to cover the crypto beat a long time ago, he's a major journalist. I'm sure many in the audience are familiar with him. He has a new article out, or a new piece out, that talks about, is there a magic number for gas after which the bottom falls out of the economy? And he pointed at $4 as having been a real important number for gas in 2008. Like, literally the price at the pump is what I'm talking about for those at home.
Yeah.
So I'd love to know, just from your perspectives, in terms of what you're talking about, dark pools and what's going on, what are we seeing when we see the $99 versus 100 target? What are we seeing when, as you noted, the index for consumer price data, right? It came in lower than expected.
Yeah.
How does this tie in to gas prices and what might happen?
So I'll weigh in a little bit on that, Josh, and it's a good point. And I will point out to the $4 per gallon commentary. That was from several years ago, if I recall the original. We've been well over $4, and actually here in central New Jersey, over $5 per gallon for at least a month. California is approaching 8, I think, if I remember. Wow. David, and I hate to put it in this context, but it really comes down to where on the economic ladder are you sitting, and how deeply does it affect your day to day? Because the truth of the matter is, it really affects people who are dealing with higher food prices and higher fuel prices. And that's a bigger proportion of their income, not even disposable income. And I do have some thoughts on the strategy thing, but David, weigh in.
It's really hard. You know how much driving I do, Ron and Josh, so it's really hard to weigh in on the pain point for gas. But I do believe that the combination between the gas and the food prices, is really hurting people. And we've seen some of the anecdotes with, car repossessions, with food prices, which have gone up meaningfully in a short period of time. And I do think that is hitting consumers. And again, it's that K-shaped recovery idea that we talk about, where, the higher end has been able to withstand this with higher asset prices, but the lower end is really, taking it on the chin.
Yeah.
So I think that's the way I look at it.
Yeah, and Josh, I'm with you. I do see your notes that it was meaningful then, $4 per gallon in 2008. Josh, I had seen a commentary, and I believe it was on Bloomberg. I could be wrong, so apologies to the great Bloomberg team. Some economists point out, David, that over $4 per gallon gas in the United States on average for more than 4 or 6 months really begins to bite into economic activity, and we're not there yet. But it'll be interesting to see how that plays out. I just want to hit some of the comments. And David, I don't know if you noticed this. Rumi, thanks for tuning in. Ron, David, and the amazing Josh. He left amazing for the end. So, but Rumi, thanks for tuning in. Steven Stimler, I think you and I are emailed a bit earlier. Thanks for watching. Any credence to the theory that Sailor STRC was involved in the dark pool $1.3 billion transactions? I will remain uncommitted to commenting on theories like that. But David, Josh, what do you think?
That would be fascinating, but I do not know. I don't have any more insight than I think either of you two do, but maybe Josh does. But that would be a very fascinating development.
But I will say this to that point, Stephen, and David, I agree with you. If you're a Michael Saylor and you're moving institutional levels of money, a dark pool is the ideal way to do it.
Yeah, I agree.
I would say I have no intel whatsoever about that, but it does make I again, like with the STRC and the 99 versus 100. I mean, certainly that's been in the news for other reasons. I mean, do you guys have any thoughts about that? And just with respect to, David, what you had been saying about Bitcoin and,
I think the way that they're paying dividends right now might lead to some movement in the price, where people, once they're getting, the dividend, may move out of it, and it creates this fluctuation in the price of it. So I'm not so much focused on that. I do think the idea, though, and I did read this morning that Strategy had moved about $30 million worth of Bitcoin on chain into a Coinbase account. That the idea that they have socialize that they may sell some Bitcoin is a really big deal. And so, fortunately, we're not down today, but I do wonder if it concerns people that there's not an ultimate buyer at the, coming in different places to buy, as it looks like Strategy's rebalancing a little bit.
Yep. David, Josh, real quickly. Steve, similar, very interesting. Just joined WSBA. Welcome to the WSBA family. So happy to be tuning in and listening to quote unquote brilliant minds. David, Josh. I'm just glad that he didn't put amazing only in front of Josh's name this time. Totally kidding, Josh. You guys know. David,
I'm just happy you didn't say beautiful minds. Like that movie.
Oh yeah, great movie. Great movie. David, I want, when we talk about some of this as well, and we've often spoken about the macro impact on crypto, right? We should probably talk about interest rates. You and I had this conversation frequently. Josh, there's also the regulatory overhang. Crypto is one of the many industry segments that we look at that are not just impacted by war in Iran, inflation, interest rate issues, also by the overhang of regulatory and legislative issues. Josh, I've seen 400 different messages and articles this week about clarity. You and I and David and a contingent of WSBA members met in DC. We met with the SEC task force. We met with CFTC. Clarity seems to be moving forward, but I feel like it's the slowest move forward I could have imagined. What are your thoughts about how this gets done, and whether or not it gets done before the midterms?
So I don't have a crystal ball, as we all know.
Only David has a
cracked
crystal
and rolled
ball.
away a long time ago. I mean, I think it gets passed. I think I'm just going to stay with that. I hope that it gets passed. Other people may have different views, but I think we're, to your point, Ron, it is slow moving. I mean, if we think back even to Fit 21, right?
Oh my God, throwback machine.
Right, like 21. So yes, this has been a long time coming, but it seems that there is, a big push, and the industry is pushing from every angle. So
And
I think
a big bipartisan push, I think, is the important part of that dialogue, particularly in the conversations, David, Josh, that we've had in DC. And Josh, I look at it through this perspective as well. I remember January or February, the three of us talking. Shout out to Adam Goldberg, one of the policy geniuses in the WSBA legal working group. He's a chief product counsel over at Figure. And I remember in January, the three of us saying, if it's not passed in February, it's dead. And in February, if it's not passed in March, it's dead. Crypto's dead in the United States. There's no market structure. We're approaching June, and I'm fairly confident it gets passed. David, is that the gate behind which so much retail order flow is waiting? Because we've seen Morgan Stanley that's going to be pushing it out. We've seen Schwab opening up spot crypto to its retail customers. Is that literally the last gate for retail crypto in America?
I don't think so, Ron. I kind of view it as this really allows the institutions to offer more products. I think if retail wanted to be buying right now, they would be buying, and there's enough avenues for them to buy. But I think it will enable institutions to offer more products. And I think we may see more ancillary products. And the last thing I would say is, I've talked about this on the show a few times, but I really do worry that stablecoins in some way are eating a little bit of crypto's lunch and the broader crypto ecosystem's lunch. They're different products, but I think that in light of the fact between the prediction markets and between AI, I think more innovation has been happening with stablecoins and tokenized assets than the interest in broader crypto right now. And let's hope that's just a trend. And let's hope that both can go on simultaneously, but that's been my feeling.
And this rarely happens for everyone in the audience, but I'm going to slightly disagree with David a bit on this. And I don't necessarily disagree with your logic, David, but I don't think it's stablecoins per se that are holding back retail. I think it's retail in general will chase the big shiny object, right? As will a lot of CapEx investment on the institutional side. They can buy AI stocks. They can play in prediction markets and get big yields and not have to deal with crypto. And the UX of crypto is still relatively challenging. I think it's actually the alternatives that they were looking at that is holding back retail and crypto again.
No, we're actually agreeing. I think what I'm saying is there hasn't been a lot of innovation in different token projects or in a way that's really captures retail's imagination. I think that you look at the space stocks and that SpaceX has captured people's imagination, and there's other stocks in that ecosystem that people are looking at and they're like, oh, maybe this is another SpaceX. Whereas there hasn't been things in crypto, I really think, besides Hyperliquid, that is really capturing, and maybe a few AI tokens that's really capturing retail's imagination. And with prediction markets, I think that fast money has gone there.
Yeah, agreed. And David, we talk about a lot, and we don't really talk about prediction to market. I see Josh, and I know she's in transit. Even blurry, I know that you've got something to say, Josh. Go ahead.
I was just going to say, I agree with both of you, although maybe slightly more towards what David was saying. I really think that, especially when I look at big banks and others, very traditional institutions, I think that when clarity comes, we're going to see the institutions be able to do way more than they're comfortable doing right now. And I do think, to a certain extent, stablecoins have been being used in a way that otherwise we might have had other types of crypto assets used. And it's been because there has been this kind of regulatory uncertainty. So I do agree with David, but that's not to say I disagree with you, Ron.
She's so eloquently explained, not trying to offend either of us, but I get it, Josh. David, Josh, the other thing, Josh, you brought up strategy. I think the largest corporate treasury holder of Bitcoin, particularly. David, I was joking with both of you last week. In my boring life, I poured a glass of wine and read the SpaceX S1, or I tried to. It's a lot of pictures too. But David, were you surprised at how much Bitcoin SpaceX is holding? And I guess it makes me ask the question, in the long run, Josh, to your point, post-clarity, post-market structure, and all this stuff we're talking about, will more and more public companies simply need to hold crypto on their balance sheets?
So I was pleasantly surprised about SpaceX holding Bitcoin and how much profit they've made from holding Bitcoin.
Yeah.
I do think that Bitcoin is an asset that will be worth being held on corporate treasury accounts. But also, I do think that when you can hold 30-year treasuries at 5% risk free,
Yeah.
it's pretty hard to move away from that. If you're a corporate treasury who wants liquidity and you can get 5% on your money, that's a pretty attractive position. So
Yeah.
I think that's something we'll see over time, though.
And strategy and SpaceX, I'm just going to say it, David and Josh, are from a risk tolerance perspective, not exactly on the deep end of being very risk intolerant. A lot of corporate treasuries in general will be very risk averse. So to your point, David, 5% on a treasury, no brainer for most corporate treasuries, right?
Yeah. I mean, look, in some companies, that's more than their return on invested capital. So, but no, look, I think, but I think we also need to like flip our mindsets, because even though the prices of Bitcoin and other cryptos haven't gone up, and the S&P is outperforming Bitcoin this year, we are making a lot of progress. And I think the Paxos news today is an example of the progress that we're making.
Yeah.
So I don't know if you want to weigh in on that, Ron or Josh. I'm happy to talk to it, but I think that is progress that we're seeing.
David, let's kick it off, and I think it's an important part. So Paxos has been around for about a decade. Josh, David, I remember the three of us talking about it in the early days of WSBA in 2015 or so. They're the first, if I recall the headline, David, they're the first blockchain native firm that got clearing agent approval from the Securities and Exchange Commission. That's a big deal, but I'm curious about A, what took so long, and B, what does that mean for market access for traditional firms?
Do you want to talk to that, Josh, or you want me to jump in? Okay.
All yours, David.
Well, I mean, what I think is really interesting is that it'll enable Paxos to settle eligible securities on a same day or near instant basis. And it'll eliminate the traditional settlement window and freeing up locked capital for institutional participants.
Yep.
And that is just a huge move forward in liquidity and assets and the ability to trade faster and freeing up collateral. So I think that is a really big deal. And it'll also, enable Paxos to bundle regulated stock clearing with its existing. They have a white label infrastructure tool used by PayPal, Interactive Brokers, and MasterCard. So it really will give them an opportunity to be competing with DTCC and some of the major clearinghouses. So I think this is a really good step forward for the industry.
I think this is a good step forward as well. Totally agree with you, David. And again, shout out to the Paxos team. It was a long fought battle. I think it took them 6 or 7 years. Josh, I think you might have seen the article as well. That said, surprisingly, not pleasantly surprisingly, DTCC has been active in the space and trying to accommodate this for some time. Full disclosure, we had DTC back in the day, David, Josh, about a year ago, and did a webinar specifically on what does clearing and settlement look like in a tokenized blockchain-based world for securities. How does a Paxos compete against a DTCC, David? I'm ripping up the script here, but it'd be interesting to get your thoughts.
Well, we're going to see.
Yeah.
We're going to see. But look, I think competition is good. And, it's another player in this arena. And so now as you think about it, it's really an opportunity to see, it's a temporary approval from the SEC, but it's really an opportunity to see if we can move to settlement in real time. Yeah. And look, there's a lot of back office challenges. I mean, obviously the blockchain enables you to do that, but you still have to be able to sort of mechanically make that all happen within a settlement system. So, I think it's going to be really interesting to see how that progresses.
Yeah, and David, to that point, and for the audience, if you've got questions or comments for David or Josh, please put them in the chat. We're happy to address them. David, I think it's critically important. People like you and I and Josh, who understand the markets and how the street has worked over time, I think it's easy to forget how important some of that innovation is from an efficiency perspective. Capital, when we're looking at collateral, when we're looking at settlement times, that idles capital. Idle capital is not making money. So when we're looking at instantaneous settlement and transfer, for example, at some point down the road, you're optimizing the velocity of capital, which in my mind just grows the economic pot from markets. Is that too pie in the sky for me to claim it that way, David?
No, I mean, I really think we're seeing financial market infrastructure in the US being rebuilt on blockchain in real time.
Yeah.
And I think that's really like a powerful, development.
Yeah.
And look, I think DTC moving towards tokenization, I think these are all really powerful steps. And look, for many years, we all wondered why it had to be T+3, and now we keep continuing to move forward. And I do think, like you said, I think this will just really make capital more efficient. And I think it will also enable maybe smaller, traders or smaller entities who want to move and be involved, like free up their capital as well. Yeah. So it's amazing that it's a Friday in May, excuse me. We're already, past Memorial Day, and we're having this kind of news in a Memorial Day week.
Indeed. David, Josh, it's been a shortened week. I have Josh, go ahead.
Oh, I was just going to say one thing with Paxos that I think most people, or some people listening probably know, is it is a much larger player than where you would immediately see its name, right? Like in terms of white labeling tokens, including stable coins, right? If you think about like PayPal's coin, right? Things like that. Paxos has been a player who has actually been the issuer and has been, it's been regulated in New York. It is, quite pervasive. And I think I'm thrilled to see these new developments because, we keep talking about, or some people say or ask, is TradFi eating crypto's lunch? And I think this is an example of how, well, maybe crypto's eating TradFi's lunch too. Maybe we're meeting in the middle somewhere and, having a healthy competition. So I'm all for it.
Yeah, no, it's a really good point. And Paxos, they're not a fly-by-night organization. They've been around since the beginning and they've done it right. Josh, I have two critically important questions for you. The first one might be more important, but do I need to get you a travel WSBA mug? Because I feel like we're leaving you out of the conversation, but you're in constant flight.
I absolutely would like a travel mug. And I hope that next Friday I will not be in transit. For those listening at home who may have followed some of my saga online, my daughter who had the brain injury in November, I had to take her to Pittsburgh to get a procedure. All's good. So 2 thumbs up, or you can only see 1 thumb right now, but 2 thumbs up, all good. And hopefully I will be in a static position next Friday for our crypto roundup.
On the private jet, in the car, in the office, Josh, it's always good to have you. And obviously, all love your daughter and wishing her every best. So glad to hear the news. Josh, a real question for you. I'm sorry to digress talking about mugs. We've been talking about the SEC a bit earlier, and one of the news items that popped up this week, and we talked about it at the legal working group meeting earlier this week, was the SEC pulled the release of its innovation exemption, which we had been talking about for several weeks. And as a matter of fact, for the audience, we might have said this the last time, but David, Josh, the 3 of us plus the rest of the contingent of WSBA members spoke to the crypto task force. Great, super smart group of people. David, I got the impression the innovation exemption was due like before we left the room to be publicized, and a couple of days later we saw it was pulled. Good thing or bad thing, David?
I'm going to give you a true lawyer answer, Ron. It depends. I will say this, that it's interesting that it wasn't crypto critics or, maybe, a contingent of senators on one side of the party lines who pushed back on this. It was actually, from what's being reported, it was NASDAQ, NYSE, and SIBO. And, it sounds like from what's been reported that they went they went to talk to the SEC and said that the framework was creating a parallel trading venue that bypasses every rule that they had been, that had governed their markets. And that, it's hard to tell if it was a regulatory objection or if it was a competitive objection. So I think it's something that, will continue to play out. Hester Pierce came out and said that, the delay is not a bad thing. It's better to get it right than to rush it out and create problems. And something Josh has mentioned before, the synthetic token question is a real issue.
Yes.
When a third party creates a token, tracking will just say Apple's stock price without Apple's consent or without giving you voting rights. How do you resolve that? And how do you resolve that investor rotation problem that Josh has mentioned before? And, it sounds like there needs to be some resolution on that issue before I think this goes into, this gets put out in the wild.
Yeah, and David, to that point, a lot of the commentary from both the TradFi and the crypto arenas regarding the innovation exemption being pulled was, if we're going to do it, let's do it right. And I think that's a really solid sentiment to hold. Josh, can we dive into that a little bit? You've mentioned it at legal working group meetings, and oftentimes we've heard the refrain that, when you're looking at folks issuing tokens and public buying the tokens, they're not actually getting the underlying equity and kind of the mix of challenges in that space. How true is that? Because it's always struck me that how do they not know they're not actually getting the security? But I think it's a common problem.
I think it's a very common problem. I mean, just granted, I don't have empirical data about this, but just from comments that I've heard from people who are quite educated and sophisticated, where they tell me that they are able to buy tokenized stocks on certain apps outside the US. And they're not getting the stock. They're not getting it. And so then it's a whole question of, okay, well, I mean, maybe, in some, I don't want to say in no instances is this happening, but I won't name some of the apps, but I mean, some of the well-known apps that outside the US you can get, quote, exposure to certain, say, to Apple stock or something like that. I don't think that people uniformly realize that this is not actually the Apple stock. And I think, sort of the threshold question that I think people should ask is something very basic. Like, does Apple, or does anyone associated with Apple know that I, as this, quote, stockholder or token holder, exist? Do I have any rights at all vis-a-vis Apple? And I think these are important threshold questions. Then, of course, the questions multiply from that. I really do think that this is a benefit from an investor.
Looks like we just lost Josh. David, while we're on that topic, and I'm with Josh on the commentary about what are their rights as a stockholder versus rights as a token holder. In that regard, I think we're getting Josh back. I don't know. Her Starlink's acting funky, David. But to that point, though, I think what gets lost in the translation, I'm going back to our old equity days. You and I have been around that block. Most people don't directly own stocks. Most stocks are in what they call book name on the street. And how relevant is that for the day-to-day retail investor?
Well, I think it becomes relevant when you have a meaningful vote on something that a shareholder proposal and you can't get an accurate count, or you think you have an accurate count and you don't, or people who own the tokenized shares who think they're voting for something can't. So I think this, one more thing, Josh, I just think that's something that needs to be resolved. And the way I look at it is, like, the destination hasn't changed for this. It's really like the timeline has. So that's how I think about it.
Yep.
Yeah, sorry, I'm driving through mountains. Well, I'm not actually doing the driving, as you can probably tell from my hand. But so I agree, Ron, 100% about, most people don't hold the shares directly. But I think it also does come up in addition to the voting. What if there's a stock split? What if there is a dividend or something like that? Sure. Do you get the benefit of it? Will you somehow, seriously, what happens if there is a stock split and you're holding this reference token? Does the reference token split?
Yeah, you're cutting out a little bit, Josh.
Have something like that?
Yeah.
You know, what
no, I'm
what
with
is
you, Josh.
there?
It's
I
the
think
it's the it's the rights and availability of the information to people who are investors. And David, to that point, institutional investors are keenly focused on this as well. It's not just Ron wanting to vote on a Tesla shareholder meeting and waiting for the proxy to come in. It's billions and billions of shares owned by institutions on behalf of pension funds, 401k funds. So this is, Josh, to your point, this is a big deal. So it'll be interesting to see how that plays out. And I do not envy the SEC in some of the conversations, simply because it's hard work. I think it's very easy for us to say, oh, look, a regulator did this, that's not good for the crypto industry. They're really working hard to build an ecosystem, or at least the framework statement for an ecosystem in the United States. Agreed?
Yeah, look, I agree. This is a thorny issue. I think the good news is that people are agreed that they want this, or at least it feels like people want this, and the majority of people want this. It's just a matter of like the execution part. So I think that's the good news, but it is a thorny issue. And can you imagine if there was like a hostile takeover or an offer, and you're trying to get enough votes to put board members on and things like that, and all of a sudden, you think you have enough percentage of the votes, and then somebody, says, you know what, I don't think so. Like, I don't think you have the right count. I'm going to question some of these votes, or vice versa. And so I think there are some complicated issues that need to be addressed.
That would have been barbarians at the gate gone wrong, David. The old flashback to the RJR Nabisco merger. That is showing the audience how old David and I are at this point. Greg Murphy, it isn't right in
Greg is right. Yeah.
Go for it, Josh, please.
Yeah, Greg is absolutely right. I mean, the Dole Foods problem, as you guys probably at home remember us talking about over the years, this is something where there was a shareholder derivative suit. They had to get notice of claims, having all of the shareholders provide notice of claims, and might serve something like claim.
Yeah.
Issued this is something that has been.
Josh, you're cutting out a lot. I know you're in the mountains with the Bugatti.
I do.
We're getting every fifth word, Josh. Let me just cut in there real quickly, and it's a good point about Dole. David, when we talk about that, it's interesting. I do remember not too long ago a lot of traditional financial services firms saying, oh, crypto companies, they use these spreadsheets to track shareholders stuff. A lot of TradFi firms do that exact same thing, David. Please correct me if I'm wrong.
Look, I was a general counsel of a transfer agent for all those years, and there were definitely times where it was challenging to tabulate the votes, and sometimes things were issues. And I think on the one hand, the blockchain is really a unique solve for that, but really, how do you line up two dual systems and make sure they work with each other in harmony in a way that's not going to impact shareholders' rights, and also look, companies' governance as well. Like, I think you want to make sure that what's proposed comes out in a way that addresses these issues. So maybe there might have been like competitive issues that have delayed it coming out, but I think if it comes out and addresses these issues, or really sparks a dialogue on how to address these issues, I think that's most beneficial.
Yeah, agreed. David, Josh, we've only got a few minutes. It's going to be a relatively shortened session today. Josh, go ahead.
Oh, well, two quick things, and hopefully I will stay connected. One is, it does occur to me, for example, say you have a stock and there's a tokenized version of it that's doing quite well, but then the company itself issues tokenized stock. What if there is a flood of funds what if there's an exit from that reference token into the other token, or exit into some other asset? How do we have a depeg? Could we end up with a Terra Luna type situation? Obviously not the same thing, but these, especially like if some of these assets end up being used as collateral for loans and other types of things, like thinking about deltas that could occur or how we're maintaining some kind of a meaningful peg. And again, like if there's a stock split, does this tokenized synthetic version split as well?
Yeah.
So,
and
or
how does
just a
that
stock
peg,
buyback.
and right, and Josh, to that point, and how is that peg enforced? David, you and I have talked about this on the crypto asset working group. Josh, you can envision an arbitrage opportunity across the board, particularly over weekends when David is trading the Asia markets. You can look at an arb opportunity, and where there's that opportunity, capital will flow into that. How does that impact shareholders?
Yeah. Look, and we joke about like overnight trading and foreign exchanges, but as we become so really global, there are stocks that may not be trading here in the U.S. They might be trading on the pink sheets. They may be trading on ADRs, and people may want exposure through tokenized assets or security. Yeah. Greg Murphy just said, relatively relatedly, think of ADRs. So
Exactly.
you can have these issues where people, could be creating dislocations in price because they want access to these things. So I just think it's a dynamic, complicated issue. So if it takes a little more time to get it right, I think that's best for everyone.
David, Josh, out of my ignorance, I should remember this. Is the SEC Crypto Task Force open to industry commentary still, or if they postpone that? Do either of you know?
I don't know for sure, but I imagine if it's been delayed, I imagine that other people are coming in and having conversations, and so I think that's probably the way it's being handled.
Okay.
Yeah,
David,
I
Josh,
don't know whether it's formal, but I would imagine that they would welcome comments anyway, even if they're not soliciting them. My sense is that they want to have an open set of conversations.
Yep.
I did
David,
want to share something AI related, if it's okay.
I was going to go there myself, Josh, so go ahead.
So one thing I just thought was interesting that I've heard is that certain banks and large institutions, I'll just keep it vague, are sending out or will be sending out questionnaires to their vendors, and vendors can include law firms and others, as you know, asking how these companies are using AI, which that's not a surprise, but really how they're using AI to lower the bills. And I think this is a very interesting turning point or inflection point, certainly for the legal industry, but just in general, as we, it made me think of it also when David was talking about, some people getting quick wins, not investment advice, in AI tokens. But thinking about some of the announcements about investments in AI firms and others, and how this might affect employment, all kinds of things.
Yeah. Although, Josh, it's a really good point. Although I keep hearing about the jobs apocalypse because of AI, and I think Sam Altman's commented, David, on it. There won't be a jobs apocalypse, particularly, but certainly how industry firms do what they do and how vendors respond to those needs changes because of AI. I don't know if you noticed, David, Josh very elegantly segued me into the last comment I've got, which is sort of the announcement that we made this week for the launch of the WSBA AI and Quantum Working Group. So, Josh, thanks for that segue. Really looking forward to it. Chrissy Hill and Adele Hogan, thought leaders from a legal and technical perspective on AI and quantum. It'll be interesting to see where that goes. Josh, you've already been named as the let's get our guest speaker into the working group. Oh, I want Josh Clayman. So be prepared for the emails saying, can you do another follow-up webinar, particularly around the quantum stuff as well. David, Josh, I'm sorry, David, Josh.
Oh, I'm looking forward to attending those working groups too. I'm definitely looking to expand my knowledge, and maybe all my time playing around with OpenClaw and some of the other things that we've been using will come in handy.
I was going to ask you about OpenClaw here. I feel like that's a closed door conversation about OpenClaw, David, if that's okay. David, Josh, thank you both so much. If anyone in the audience, thank you again so much for watching. If we missed any questions you wanted us to cover, info@wsba.co. David, Josh, or I will do our best to review. David Brill is flying in, Josh, to New York City next week. There are a couple of events, and I'll be loitering around New York City again for Tech Week. Josh, what will you be doing next week?
So I'm not quite sure yet. There may be some travel up my sleeve, perhaps to Paris, but it's to be determined.
You see how like just nonchalantly David's like, I might have some travel to Paris. Whenever the jet's fueled up, they'll tell me where I'm going. I'm going to talk to someone who's not flying in Gulfstreams. David, what are you doing next week?
Well, I will be in New York for some meetings and also some events that are, for New York Tech Week. And then, I'll also be reading because there's been so much going on. We didn't even get a chance to cover, SoFi with their own stable coin and that, Kalshi getting perpetual futures, for U.S. markets approved. So definitely some reading to catch up on. And then obviously May is, I didn't hear what Josh said.
What'd you say, Josh?
Oh, I was saying Project Agora and its final report. So for the financial market infrastructure fans.
And then, for those sports fans, I will be watching Game 7 tomorrow night of the Spurs and the Thunder, and what should be a great climax to a really fantastic series between the two.
David, I've heard on the radio that the courtside seats that you usually have are very, very expensive. So please take some photos and share with us folks who are in the bleachers.
Well, Ron, I was trying to be low key about it, but I may be attending a basketball game as part of my New York visit, but we'll see how that plays out.
It's a good life. David, Josh, it's good to see you both. I will be also in New York City next week on and off. We might arrange a new networking session. We just had one last week at the Players, but lots of members looking to get together as well. David, Josh, thank you both so much. It's always great to see you. I don't know if you've both noticed, I've tried to stop texting you quotes for crypto after 8 p.m., but we will catch up next week. For everyone in the audience, thank you so much. We'll leave it there. We'll be back next week. Take care.
Oh, there's a comment. I'll just say there's a comment coming in saying, how come you guys don't cover Africa-based news? Well, I would just say if there are things that people would like for us to cover, when we circulate the preview of the coming week's roundup, maybe just put in the comments things that you might call.
We do have colleagues in Africa. Rumi, it's a good point. We should talk about ambassador work for the WSBA. We're trying to have global conversations. We do have members in Europe. We do have some members in Asia. Rumi, reach out. We'll have a conversation. We'll try to cover more. Thank you so much, everyone. Have a great rest of the day. Bye-bye.